Good morning, everybody. How are you all doing? So today is January 15th, and we're going to take a look at a coin called NEBLIO because my friend Winnie, she suggested that I do a tea on it. And I know, right, guys? My friend. Since when does Sir Mr. Fibinucci have any friends there? But Winnie does, she did request it, and of course I would do anything for her, right? But do you guys know mainly why I would do anything for Winnie? Because she's the Pooh, you know? Who wouldn't do anything for Winnie the Pooh? I'm from Winnipeg, and that's actually where Winnie the Pooh is from. So here we go. Let's go take a look at NEBLIO, guys. Looks like a very interesting coin. And I just want to tell you guys, first of all, I've been getting some comments such as, you know, this is not a good coin. I'm not talking about NEBLIO in particular, but in general, people are saying, why are you looking at this coin? This is a horrible coin. Well, keep in mind that I'm a technical analyst, right? And a technical analyst, they see things differently than a fundamental perspective, right? So the core principle of a technical analyst is that the market's price reflects all relevant information. So you can see everything in the charts itself, and we look for history of securities or of the stock itself, right? Rather than looking at external things. So we look at the charts where we can see the history of something, and we look for patterns, right? Instead of looking for things such as fundamental news events that might be driving it, right? So we believe that like the price action repeats itself in a way, in a behavior, and in a pattern that we can recognize, that we can eventually play, right? So these are two very different things that we are looking at, okay? You might have seen lots of videos that are talking about the fundamental side, right? But we are using, as a technical analyst, indicators and candles, right? Charts in general, that allows us to time things, not a little bit better, but, you know, it can be good. Don't get me wrong. Investing can, you know, if you're reading good news and you hear about news before other people and you hop on the wagon before something, some massively explosive news comes out and you buy it, of course it's going to be a good time regardless, right? Because technical analysis, it cannot predict things such as news coming up, right? You can see it as it is happening in the chart itself based on parabolic movements upwards and things like that, right? But you can't actually anticipate that breakout, right? I mean, if there was a big downtrend and then, or just downtrend or leveling off, right? You don't know when it's going to go back up if it's been consolidating for a long time. But what fundamental news can do if it is releases, right? News trickles, so the people that get in on it first can really get in on it, right? And they might profit a lot. So technical analysis can't predict things like that. So, you know, there's the pros and the cons of both things. But keep in mind that I am a technical analyst and I see price action and I look at history and in the charts itself, okay? So without further ado, NEBLIO, it's trading at a $12 million volume right now, mainly on Binance and a lot of the Asian markets as well, mainly, right? So it's got a $300 million market cap coin right now. And whether they're good coins fundamentally or not, we have to acknowledge the fact, NEBLIO, where is it? Oh, it's in the next page. There we go. So it's ranked 103 right now. And when we look for 7-day graphs like this, for example, we look for coins that are really leveling off, right? Sideways is good as well, but we want to look for coins that are slowly leveling off that looks like it could possibly break out sometime soon. I don't even know what Storm is, but that looks like a good coin. This coin looks like a pretty good one as well. QuantStamp looks like it's leveling off right now. Lots of coins, right? It looks like they're leveling off rather than on an uptrend or just slowly sideways consolidating. So it is an interesting coin from a charting perspective. So let's take a look at it, okay? Now, a little bit of theory like we always do before we start off. Whenever a new coin is released, it'll do an ABC pattern like this, okay? It'll do some sort of 1, 2, 3, 4, 5 pattern first, and then it'll just do some sort of, you know, A, B, C, like that, right? Or people might even consider this like an A down there, B, and a C for it to level off. It really depends on how you look at it and how it spikes up. But after this, there's always some sort of A, B, C correction in some manner, shape, or form. And these ones here can come in so many different ways and they can be complicated, but it is the uptrends that are easy to spot. So if I went on, for example, a daily first, we can see one big spike right here. And anybody who played on a daily chart, right? Anybody who plays on a daily chart, if you could actually short this, as soon as this candle formed at midnight UTC there, they would have entered into a short position. If you could even short it, I don't even know. And they would have just wrote it down because this candle was implicative that a downtrend was happening. So as soon as this forms, it would be a very bad idea to go into a long position. So here implies that the bulls have definitely tried to push it up for this day, and the next day they attempted again. But these long wicks by the end of the day imply that the bulls have lost control and the bears have successfully pushed it back down. So two things could have happened, right? The bears could have pushed down there, and then the bulls pushed back all the way up, all the way up, all the way up over there, and then the bears pushed them back down, right? There's so many variations of what could have happened, right? So, or maybe the bulls pushed up first, and then the bears pushed all the way down, and then the bulls pushed back up. So those are variations of as well as what can happen. So if we go into a lower time frame here, a 4-hour chart, we see different varieties, right? We see different variations of this right now, and this could very well be an ABC like that, okay? What if this was an ABC right here, right? So there's different annotations that can be made. Now, I want to explain to you guys the mechanics of something. There's no doubt that this looks like a flagpole, and we can all agree on that. Right here, this looks like a flagpole, right? A flag, like that. Better in a 4-hour probably. That looks really good. So could this possibly be some sort of flag consolidation like that, we ask? Yeah, it can be. So let's go over the mechanics of a flag. As you guys might know it, from a very simple perspective, we just call it 1, 2, 3, 4, 5, like that. People will always say 1, 2, 3, 4, 5, but there's a lot of confusing things about it. And I'm going to explain to you guys why it can be confusing. So let's say that this was A, B, and C, like that. That makes 3 touches, correct? Yes, it does, right? Makes 3 touches. And then that fails. So then we end up getting a W, X, and Y correction like this. So now we get another wave in here, an impulse attempt up, and then we get a zigzag coming down here like that, okay? Right, so yeah, sure, people can say this is 5 touches. We're gonna circle it. 1, 2, 3, 4, and 5. And then people might want to play this C breakout, right? Just like that. Well, what if B never touched there? Okay? And now what do you got? Right? What if C never touched as well, where it slightly came off? Actually, usually it does. It always does because we're obviously taking these 2 points first, right? And then this one over here is formed by these 2 supports over here. What if that never formed, guys? Okay? What if B never actually touched as well, where we only have actually 1 support point up here, okay? Or 1 resistance point, taking this one and this one combined, okay? And then this one is most likely to fall to here, right? We'll say. So now we have basically, instead of a touch, like this one wouldn't count as the next one then, okay? This one wouldn't count as a successful touch because we can either count it on we'd probably count it here instead. So then if B never really touched there, then we would count C as the one here. And then it attempts to make one going up. And then if that one fails like that, what we end up getting is a triple Elliott wave combo like this. W, X, and this becomes a Y point. This becomes another X. Whoops, I don't know why that one did that. I meant to draw W, X, Y, Z. There we go. So this is W, that's X, this is Y, this is another X, and then that becomes a Z point down here somewhere, like that, right? So then, yeah, so now this X is likely to fail right here at that particular point because it has a massive resistance line and it wants to test somewhere down here again. And then this is how we get, so W, X, Y, Z corrections can come in many different forms, or just W, X, Y. And then we now get another successful touch right here, which now makes 5 altogether. 1, 2, 3, 4, and 5. Now we officially attempt to break out, because the third attempt is what they call always a successful one to break down when it's already on a downtrend. So you guys know the mechanics of an ascending triangle, right? The mechanics of an ascending triangle, people say, is that it makes an A, B, C, D, E, right? A, B, C, D. Oh, sorry, it's the other way around. 1, A, B, C, D, and E, right? And this A came from up there on the uptrend. And then on the third one, when it's attempting to break something, such as this pattern, like that, the third attempt is always the most significant one that attempts to break it. So by this logic, from even an ascending triangle, this is how flags break out on the third successful breakout attempt on a downtrend. So I know that's a lot of theory to take in, and I apologize for that, but it's very important to understand a lot of this that happens for us to time it, right? So let's just say, for example, okay, how this actually helps people. How does it actually help someone? Plan, okay? So first of all, if we see this fail right here and we see clear signs of reversal, clear signs, just bearish divergences all across the board from RSI, MACD, you name it, a long wick such as this one right here, okay? When you see it go down, right? Right. So actually, you see it count. You count the 5 waves to see. You know now it's going to make an attempt to break out to an X, for example. Okay, if it makes a zigzag like this, that is. This is a zigzag. Okay. So zigzag annotation, we use W, X, Y. Triangles are usually A, B, C, D, E for flats, etc. as well. All right. So now, you know that the 5 waves are in, you're going to try to buy along this point here, right? At a reasonable Fibonacci level where it levels off, okay? Now you know it's going to attempt to make some sort of support or resistance from this point at the top. Could be like that, you know, some resistance that we're just going to drag over. And we're going to see if it's going to bust out of it and break this or not, or if we have clear signs of reversal. If we do, it allows us to anticipate another ABC down here when we know our patterns, or we can even get into a short position down there, right? And we know that because there's some sort of support that's going to form right here, it's going to eventually make some sort of sloped or parallel or wedged or some sort of pattern that's identifiable. So then once we see rounding off, when an ABC is clearly made, we can just buy where it's rounding off near the bottom here. And then let's say that the X fails, right? We know where this possible X is, and that possible X is from the resistance of where this top point is, this one right here, and you bring it down here like that, okay? So we know that's a visible one. And the third one is the best to play right here, the Z position, because we have this form, we have this form, and we can anticipate a breakout from really low RSI. So knowing how these form can really help you position and time your entries. Let's say this happened, you know, this is today, for example, let's just say, right? This is today, and we can put on our tracker, on our Excel tracker, whatever you guys use to track your coins, that, hey, based on how everything is going the timeline, maybe in about a week and a half, we might get to, our week, we might get to Y position, in another week, we might get to Z position. So you're just going to add these to your list of things that you're tracking, right? So when the time comes near, you've got really good possible entries down the road. So this is why I like to plan far, far in advance for my entries and exits. And I also set very strict risk to reward ratios as well. And I'm going to get into another theory for you guys later, and that one is a risk to reward ratio setup as well. But I've got to actually pull up some stuff here. Let me just get it ready because it's very important for this particular one. Okay, so right now what we see is a wave up like that, right? And depending on how we draw it, if I draw it wick to wick like this, we'd see it wedging in here really hard, right? And that looks really, really, really acceptable in here to me, okay? If we go to a 2-hour time frame and we draw it, you know, on the extreme side of the most extreme top, we still see it wedging like this into here, right? However we draw it, and whatever time frame we look at, we see it break down here first of all. Okay, this level of support wasn't enough contact points for it to be relevant. But I just want to show you guys first of all this right here, that this is basically 5 waves going up, okay? It's 5 waves going up right there. I don't want to go through the entire count, but if I had to, wow, I couldn't even count it, to be honest. I'm going to guess something like this, because I don't want it to be too rushed. Something like that, maybe? Yeah, 1, 2, 3, 4, 5, consolidation, 1, 2, 3, 4, 5, consolidation, and we get the 5th wave going up there for pretty much a double top. So that makes a lot of sense, counting it like that as well. All the rules perfectly apply. Wave 4 does barely or doesn't at all retrace to wave 1 territory. I count 3 subwaves for each one as well. So is the top in? Could be. This one barely retraces only by a wick, not even. So I would definitely consider this as a possible wave 3. Tiny, tiny wave 3, an extended 5th wave in there. And here we don't see the first subwave because it's very small, but here we also see the 5 waves in here. This one here, we say to ourselves, hey, this one got an extended wave. Extended waves tend to be a thing for this particular one. And here we see the first tiny wave in here as well, and we see really, really heavy waves going up. It kind of follows a similar trend, right, where it goes parabolically up around the 5th wave there, especially that 5th wave. The 5th wave of the entire thing, and the 5th wave of each subwave. So now that we've isolated that it has indeed reached a 5 full beautiful subwaves up for the first primary wave, we now annotate this as wave 1, right here. Wave 1. Now, we know that from Elliott wave that there's 5 waves going up, with waves 2 and 4, which are being the corrective waves. And, you know, I'm just going to give you guys an example, okay? An example such as this, where wave 2 corrects in ABC against the trend, so it's a counter trend, and this one might do something like, I don't know, it might do, I'm gonna draw like a descending or an ascending triangle, A, B, C, D, and E, right? Where that shape right there could be an ascending triangle, right? That's for all of wave 4 I'm talking about, all of wave 4, then breaks up to wave 5 there. Or it can be something like a wedge shape, you know, like this. It can be like almost like a flag consolidation as well. It can be something like a wedge like that. Symmetric triangle, I mean, like that, right? It could be the wave. It could be an A, B, C, D, E, and the flag type consolidation as well. But these two usually are not the same. So what we are in right now is this pattern, the ABC, right? So now we have to acknowledge the fact that 2 is somewhere down here, not somewhere down there, but I'm just labeling it, right? It could be anywhere. But this is now wave 2 of the primary, okay? And right now, after we've isolated the regions that it is bound to, right? Here there's really no connecting lines. We see it break down on a downtrend for this particular slope there. But what we can't acknowledge is that sure, this is kind of a region that it's going to be bounded to right now. And something is going to happen there, okay? We know something's going to happen there because we're just basically taking a support line from the most relevant, a sloped support line from the most relevant areas that show the most price action, right? And activity and support basically, which is this one right there. And then we see the resistance that's sloped in the most extreme cases, right? The most extreme cases, we're going from the absolute top, including all the wick. And then in the other cases, we're going from a 4-hour candle and just taking wick to wick, right? Where we're acknowledging the fact that some of these pokes upwards could be bull breaks, right? Or sorry, bull traps. So are we acknowledging everything here right now already? Okay. Now we're also going to acknowledge the fact that these zones, this zone right here, barely held as support, and it didn't actually at all, right? That zone right there, I'm going to say more so this area right here, held as support for a little bit because of the activity that we see here that generated resistance. So now on the way down, of course, it's going to act as semi-support. Now this failed, guys. This failed. So now we got to acknowledge a lower range of support, kind of a lower tier right there. So for example, that one's blue, I'll call it. Okay. And now we even have a lower range of support as well, right around here. Just taking the same general vertical height, right? Now we got this guy here as well. I'll make it purple. Do you guys see where I'm getting to? So now that we know the possible buy zone entries, this green one failed. It failed, guys, okay? Now we are going to the next lower level. And of course, the even lower level of support, which we don't want it to get to, is all the way down over here, okay? Now that we've seen this impulse wave up, we're going to take the Fibonacci to ask ourselves, did it retrace a bullish amount? Did it retrace a bullish amount at all, okay? A bullish amount would probably be, you know, a very, let's just say EOS, IOTA, when they were very bullish, Ethereum Classic, NEO, okay? During its very bullish consolidation phases, they retraced between, you know, 382 to 0.5 regions. The majority of the price action was probably in this region, the upper, or sorry, the lower 382 range, but the upper 0.5 range, okay? Now we say to ourselves, wow, okay, this coin here, it's actually retraced more than 0.5, more than 618 already. What is going on with this coin, right? And now it makes me wonder, how long has this coin been around for? Okay, let's take a look at it on NEBLIO, or sorry, on CoinMarketCap. So was it just released? Okay, it's been around since September, right, that we see here. Something recently and drastically happened to it that made it spike up like that, right? So there must have been some fundamental use or technological announcement or some improvement on their technology, right, for their coin. So something must have happened that made it go from $7.75 all the way up to $700 or $60, right? And now we also have to acknowledge the fact that a lot of times things happen where coins will spike up, right? And unless it's like a top 20 coin, you know, those are different stories. Those are not going to spike up like that and then return to base level. It just does not happen, guys. Like, you're not going to see Litecoin return to 50 bucks. You're not going to see Ethereum return to like $100, $300, right? Or even 500. You're not going to see Bitcoin return to 3 grand. Not anytime soon, at least, unless there's a major correction or, you know, burst in a few years or whatever. But now this spiked up and we asked, why the heck is it retracing so much right now? Doesn't it make you kind of wonder why it is retracing this much? And it's not like we're also seeing the volume pick up as well, right? The volume is still declining on even the 45-minute one, okay? The volume is still declining. Take a look at it closely, and now we see the volume declining over the past 3 hours, What about in the past 15 minutes? Oh, look at this. We're seeing volume starting to pick up slightly, right? We're starting to see volume pick up slightly in there. Now, we want to see what kind of structure this is now that we've acknowledged all the supports, all the possible resistances, the Fibonacci retracement, why the retracement is so much as well, okay? All these things. I'm just going to skip through it, not every single subwave. This is basically A, that's B, and that is C in here. This one I'm going to take a little bit of a better average right here. Go something like that right there maybe. Sorry, I forgot what I was saying because I had stepped away to get a little bit more coffee there. So we see ABC here, right? We see an ABC, definitely an A, B, and a C. And the first shape that we would want to assume is that the A, after the B hits there, is that the C could possibly make a shape like this, okay? Possibly, we see that a B definitely doesn't make a double top, right? We know B doesn't make a double top there, so this shape is discounted. Throw it away. It's not making a double top, guys. Not right now, at least. So the next shape, because B lands there, we would assume, hey, could it possibly be a wedge like this? Consolidation. But then we also notice that if that were to be true, the retracement would be a fairly good level, actually. Like between 3.2 and 0.5, right? So that'd be a pretty good retracement in general. So yeah, we could get a very truncated C is what they call it, which falls short to a double bottom, okay? Double bottom there. But guys, C breaks out of this formation right here, okay? C breaks out of it because it's really no visible support, right? There's no visible support really where we can even use that. So what ends up happening is it ends up making this kind of pattern, an ABC like that. And we ask ourselves, will it be a double bottom? Will it be a double bottom? Because now this shape is definitely wedged into here, right? If we go to right there like that, okay? Every time it's wedged, sure, it breaks out of that resistance a little bit, but it still keeps getting wedged into there. So now this descending triangle actually breaks down, guys. It breaks down, and then now we end up getting what we know is confirmed as like a zigzag, which makes an ABC just like that. Okay, so that makes an ABC like that. So now, because we know it's making a zigzag, which fits to be an Elliott wave ABC zigzag, and Elliott wave in general, we know it will make an impulse up, okay? So as soon as this broke down the symmetric triangle, or sort of the descending triangle there, right? It's more so wedged down like that. But nevertheless, you guys see lots of activity just in general like here. It keeps getting lower and lower. As soon as it broke down, I would say to myself, not darn, but yes, it broke down. It's making a zigzag. I'm going to try to count the Elliott waves here. I'm going to go into a good time frame here. I'm going to try to count the Elliott wave here. And I'm going to try to catch the bottom, right? So from right when the downtrend began, basically, to, you can call it many ways. I'd probably call it like here, 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 and there. 5 waves. As soon as the wave 4 did not retrace into the territory of wave 1, right here, I would say, yes, that's wave 4. The wave 5 is about to begin. And I will catch the wave 5 bottom because I know that X is going to break out. So then I would say to myself, oh, wicked, right? We have a B point that formed already. We drew this line, right? So B right there, we can say. We drew it wick to wick, remember? So we know that B is kind of like that on a 2-hour time frame, or was it a 1 hour? Sorry, right here. I draw it on a 1 hour like that, okay? With wick to wick to acknowledge the fact there's some bull breaks. So then this zone right here, when the C is formed, is my buy zone. Right there. It would also be slightly higher, I would imagine, or very close to a 1-to-1 extension of Fibonacci. There you go. So here's a 1-to-1 extension zone. I usually target a little bit right here. That's my zones, but I would be able to acknowledge that's leveling off. Even go to 618 just to be safe. Then boom, that's how you derive your buy zone to try to break out. But because it breaks out, what ends up happening is this instead. It makes an X, right? It fails. But it does break out a little bit right here, this line that I'm moving. It breaks out of it because it's trying to make an X. But because it failed, right? We can even use wick to wick still like that. We can use wick to wick and extend it. Just extend it, extend it. So now you know that there's going to be a WXY in here like that. That is now a W, that is now an X, and you know there's going to be a Y somewhere around here when it makes a zigzag. So here, I would probably imagine that 1, 2, 3, 4, and 5. This is still making it right now, guys. Okay, this is still making it right now. That's what I see. Because we count 5 waves coming down here. 1, 2, 3, 4, around here, and 5. I'm sure we'll see more subwaves. And then now we see an ABC against the counter trend, right? We see an ABC against the counter trend there. And then now we have to expect one more touchdown here in a 5-wave pattern. 1, 2, we still see it going down a lot. 3, 4, and 5. And we say to ourselves, hey, what did the other ABC come down to? Well, it was about the 618 Fibonacci level, okay? And we're going to say to ourselves, can this ABC come down to a 618 Fibonacci level as well? So this one, hold on, I think I'm doing it wrong. A, B, I'll use that as B up there, the spike. So it went to about the 70, almost 1-to-1 actually. Oh, I did it wrong earlier, so I would have done it right. Mine would have been maybe around this zone in general. Excuse me guys, I have to sneeze again. I burped there. Sorry about that, I burped, guys. I'm just taking a sip of more coffee here. So, yeah, this would have been a good buy zone to go to X. Okay, now that we're counting, and we know that this got to around the 78.6 region, we're going to say to ourselves, all right, well, 1, 2, 3, 4, 5 needs to form still, and can it also form a similar type of ratio? A, B, C, where it gets to about the 786 region. And surely enough, it does. Not only does it get to that region-ish, okay, like get to that region, but it also still falls into this top support region right here, right? This region right there first, the blue box. Not only does it do that as well, generally, it is also falling to where this yellow line is, the one that I'm moving. Whether we take it from here or regardless of the average, right? It's getting to about right here, this position. Make sense? So, is this sloping in any particular fashion? Right? Where's the 4th point going to be? That is the question. Where's the 4th point going to be? Right? And this will most likely make a channel, something like this in here, where it could be very, very steep coming down. Okay, now that we know that, I think that around this region right here, you know, like above, see if above 14,400 Satoshi holds, 14,400 Satoshi holds, or above this region right here, see if above 10,400 about. So 10,400 and 14,400. It's going to level off into one of these regions. Okay, now that we've confirmed that this is the WXY, right? 1, 2, 3, 4. Yeah, this one's a very hard one to count in terms of supports and resistances for a flag, but this is how we're counting it right now. So now, ABC is a three-wave combo, right? Now, if we have two ABCs, it becomes a seven-wave combo. And let me explain why. We're not a seven-wave combo, but a seven-wave structure. Oops. So that goes like that. Lots of Elliott waves now that I'm finding. So this becomes W, this is X, and this is Y, right? So this is now 1, 2, 3, 4, 5, 6, and 7. If we get a triple Elliott wave combo, we get something like this. Instead of 7, can you guys guess how many there are? I think there's 11. Let's have a look. So now there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Because now this annotation becomes W, X, Y, X, and Y. And these can come in so many different varieties as well for shapes. They can come in channels, they can come in expanded flats, they can come in flags, right? So I'm going to show you guys where we are in the process right now. So right now, we can see that we've made an A, B, C, an X, and an A, B, and then it's about to make a C in here, right? This is going to be the A, B, and somewhere in here, C, you know, C could be anywhere in there. We can verify that very soon. So now we see 1, 2, 3, 4, 5, 6, and 7 coming down just like that. So we know that the bottom is so close, guys, like above 14,400. But if that for some reason failed, then we can expect it to fall under like 14.4 and above 10,005. But what's important to acknowledge right now is that I bet you that we will find confluence with all the indicators, that it is still on a massive tear downtrend, but on time frames, on like the 1 hour, it is on a tear, right? You guys see that? It's reaching very oversold zones, but we can also acknowledge that this looks like it wants to curve upwards eventually, and it's actually becoming bullish soon, right? Soon. What else? If we look on the 3 hour, it's also peaking down a little bit, but the question is, will we get bullishness across the board? Whether not like that, but maybe bullish signs like that? Are we seeing any bullish signs like this on anywhere right now? That's not that's not really bullish. This one here, it's poking down negatively as well, right? In the oversold regions. It's very oversold in this region as well. It's down ticking parabolically right now because we're still on this third wave coming down, guys. Okay? But the question is, will it level off slowly soon? Because a fourth wave is overdue. Right? Now let's see if we can count sell waves in here. Let's see on a 15-minute. Not really. 1, 2, 1, 2. Maybe. Can we count 5 waves in here? Not really. It's hard. It's extremely, extremely hard. Super difficult. Nope, that didn't retrace as desired. Maybe this is it right here at the end of the beginning of the breakout. Beginning of the breakout, like right there, is the beginning of wave 1. And that's 1, 2, that's maybe 3, 4, and maybe 5. But we are just about to start this fourth wave correction. Okay? And you guys see how oversold we are in the 5-minute region? Look. Okay? See how oversold we are in the 5-minute region. We are hovering so low there. So this has got to bounce, guys. It has got to bounce for a fourth wave correction. But because in general, everything here is still down ticking bearishly, it just means that on the short term, like on the 5-minute, on the 15-minute even, right? See how oversold it is? It means that in the very short term, it's going to do a bounce, right? Because the 4 is overdue. We don't know. Maybe the 3 is going to go down a little bit lower there. But the 4 is going to happen whether we like it or not. And the reason why it's going to happen is because on the short term, it's too oversold right now, so it's going to do that. But in the long term, we use these as charts to give us an overall idea of what it's doing in the long term. And in the long term, it is still going down overall, right? Which reflects the entire final wave coming down like that, okay? So that's what that's doing right there. Like, for all we know, it could just be the first subwave, right? Of the fifth wave, but that's also not likely just based on how oversold everything is. So if I go on like a 1 minute chart just to see how much activity there is, right? It's not breaking into a bullish zone at all. None of it is breaking into a bullish zone. But what we do see in the 5 minute chart is that it wants to curve up. Anything that curves down like this for this long, it eventually wants to curve up. It wants to snap back and get close to the middle, right? If it's overbought and very bullish, you see it snap away from the 0 MACD line, right? If it's very oversold and people are selling off, then it goes really far. But everything always wants to get back to the middle range, okay? So this is so oversold right now and is so far down that it will eventually return to the middle there. Just like how everything on the RSI eventually returns to the neutral at 50. That's why on RSI, we consider between 60 and like 35 to 75, you know, that kind of range, maybe 35 to 60. This is a neutral zone. And do you guys know what a bullish zone looks like? That's not even a bullish zone, okay? On a 5 minute. This is nothing. 80, 84. Let me show you guys what a bullish 5 minute looks like. Okay? This is what bullish 5 minutes looks like. Right there. So by Brown's law, anything above, basically, that's staying above 40, okay? Anything above here, above the 40, that's a very bullish zone. 40 and all the way to the high 80s. A neutral zone, when you see a correction zone, would be basically the opposite of that on the lower time frame, on a lower end, okay? So for example, here you see it not even go above, say, 60. So 16, anything below very low there, that's how you know it's in corrective mode. Now, how do you know it's in neutral consolidation mode? Like say for the B, well, it's usually between 65 and 35, like I mentioned. So we take a look at all these signs and we know that, hey, that's a neutral zone right there, okay? And we see the correction zones, right? See how far the correction zones are dipping even to 20 and stuff. So right now we know that we're still definitely in a correction zone. See how people are buying up, guys. Since I made this video, right, it was actually down to 158 Satoshi. It's at 161 Satoshi. We're also seeing volume pick up now, okay? In the past 15 minutes or 5 minutes, the volume, see here, volume is super low, right? I'll delete some of this so you can see it. See, the volume's super low during the downtrends here. But here people are selling off because it's the wave 3 coming down, right? Here people are not, they're buying up here because it's the slight uptrend correction for the subwave. And here the volume's starting to pick up because people are catching on that it's very oversold right now and it wants to go up soon. So for the 5 minute RSI, see for the corrective waves, waves 2, it spikes up, right? For the corrective waves, they spike up. Just see if it's going to break above this line, above the 60 RSI line, or above the resistance for the RSI. If the 5 minute chart even could break above the 60, then you're now in an uptrend. I'm not talking about here. Here it definitely will. I'm talking about for the wave 5 when it completes. So I do think that there's some potential gain right now for small gains, right? For absolutely small gains. Will it break out of this particular area? Like, this is a hard resistance here now, okay guys? The hard resistance formed with basically B, with X, and with another B point right there already, okay? Would you guys agree with me that this is a hard resistance? 1 section, 2 section, 3 section. Would you agree with me that this is a fairly hard support as well right now? This line here. And there's no doubt that anybody can argue that this is not the range bound region that we are working in, and that's where it's isolated to. That is why I will say that I'm looking anywhere. I don't count 5 waves yet, guys. I'm looking for, you know, like keep it on your radar if it's gonna go around like under 155, right? I'm not saying that I'm not no financial advisor, but I'm saying keep it on your radar under 155, and especially keep it on your radar around 144, right? Around that range there. And then if that fails, especially keep it on your radar under 14.4 and like above 10.4, because here is a very likely region to bounce as well, because we're also reaching probably a very critical fib zone, fib level. Right now it's right between the 618 and it could get to about the 786 level, and this is a critical support zone right now, above 10.4. Okay, above 10,400 Satoshi, and then if that breaks, guys, like we're gonna see the ranges between under 14.4, 14.5, and then if we break under, say, 10,000 Satoshi, guys, it's gonna be a free fall. It's gonna be a free fall to all the way to 7,300 ranges, maybe even lower than here, maybe all the way back to the base level right here. Okay, so that is how we evaluate these supports. We see a lot of oversold signs right now. Lots of oversold signs. We see waves 1, 2, 3, 4, 5 forming, but we don't see even 3 finishing yet or finding support. There's no wicks rejecting it, right? So I have to assume with certainty that the wave 3, even if it ended in this green box, wave 4 could retrace somewhere, say, to here, right? Maybe even less, whatever. Wave 5 could be a double bottom right in this buy zone again. But wave 5 could also have the same magnitude and just go down below the 14.4 region into somewhere here. But will wave 5 be super extended? It's possible. It's definitely possible, but usually the wave 3 intensity would have indicated strong momentum already, and wave 3 would be stronger, right? There'd be more sell-off volume as well. So I'm definitely going to keep an eye on it on my watch list, Neblio. I'm going to see if it's going to stay around the 14.4 region and above, right? After this 4th wave finishes, if it definitely bounces, I'm definitely, it's something I'm going to keep my eye on and be interested in. I don't trade on these exchanges, by the way, guys. Every time I say it's something I'll be interested in, this is all hypothetical. I've got my portfolio fairly set right now, and these coins are for the public. So it's more so just me hypothetically saying what I would do if I were to actually invest in it, right? So it's me just saying what's on my mind as well. And don't ever forget, guys, like I'm no financial advisor, right? I'm just saying, I'm just giving my 2 cents on what I see in the charts and what's on my mind and typical plays from my perspective if I were to play it. So please don't mistake it, okay, guys, as me being responsible for your financial decision. I'm not talking about you, Winnie. I know that you're responsible. You're a big girl. But you know who I'm talking about, Winnie. You know who I'm talking about, the people that are like, I really hope that you're right because I put my entire life savings in my kids' tuition and I even sold off my wife's diamond ring. Yeah, so you better be right about this, that Ethereum's going to hit like $9,000 in 2 years, huh? So, you know, don't put pressure on me like that, guys. Hey, guys, do you guys want to hear a joke? You guys want to hear a joke? I'm going to tell you guys a joke that I learned lately that's been like really popular, you know? So I told this to my parents and they didn't get it. Maybe because they don't understand English that well, you know? So I told them, I'm like, hey mom, dad, do you guys know the difference? I probably told this before to you guys. Do you guys know the difference between a hippo and a zippo? And they're like, what? First of all, they probably didn't even know what a hippo was because my brother's name is Hippo. So they probably thought I was talking about my brother. So I'm like, yeah, the difference between a hippo and a zippo is that one's very heavy and the other one's a little lighter. And they had no idea what I was talking about at all. And they're like, oh, you study mathematics yet today? Oh, you go play piano, baby. You go study hard, okay? I want you to be doctor when you're older. And that's kind of how the conversation segued, you know? So every time, like, I get into a conversation with my parents, you know, like, you know, apparently trading is like just a video game to them, like how they see it. They see it as, you know, like a job, but they more so see it as a video game that I'm addicted to. And they understand. And, you know, every so often, like, the conversation comes up, I wish you were, like, a doctor or something like that. It's like, man, why do every Asian parents want their kids to be doctors, you know? Like, what's wrong with studying something like philosophy or psychology, right? Like, those are awesome fields. I'm not saying they're bad. I'm not being sarcastic. Okay, I think we're really getting off on a tangent now. Sometimes when I get off on a tangent, I can really go off the handles. So guys, that is that is where we see. That is where we stand right now, okay guys? So those are my two thoughts, right? I want to wait for a small subwave to finish here because I don't see anything yet. I don't see anything at all that indicates the 5 waves done. Like, this couldn't be it either. Some people would argue, well, this is 1, that's 2, that's 3, that's 4, that's 5. Well, first of all, wave 3 is super duper tiny. Okay, it doesn't even retrace 1 to 1 at all. Okay, and secondly, wave 4 retraces into the territory of wave 1 heavily. So those two things, they discount it. Hey guys, look, we're upticking right now. Reversal is absolutely imminent. So guys, where are we going to target first? I'm sorry to say, but we're going to have to target, you know, the resistance first of all. So is it a good play? Yeah, decent play. Decent play, right? So we target a resistance of 25% gain. Okay, and then we just set our stop loss. Like, we're going to target, obviously, the resistance of the channel. So maybe 17,500 Satoshi. And then, you know, you have a chance to gain 25%, which is not bad. 17,500 Satoshi. There's a good chance that it might even break up, actually. Break outwards out of it. And we're going to talk about targets for that if it does, okay? So this could even be the attempt, right, to break up. Who knows, right? And then you're going to set your stop loss because, of course, it can go down as well. My stop loss would probably be super tight, guys. It'd be super duper duper tight at maybe 5%, right? At 5% right there. So you got a risk to reward ratio of 5 to 1. And I'm gonna play out this scenario. Actually, you can even set your stop loss at 13,000 Satoshi here, okay? I'm gonna play out this scenario for you guys with the 3. We're just gonna say 3 to 1 risk to reward ratio, and we're gonna use a flip a coin scenario, okay? We're gonna flip a coin over 10 games, okay? And I use these flip a coin scenarios often, and this relates to risk to reward, okay? So imagine you're going to the casino, right? And the goal of a trader is to win over time, and they do not focus on winning one specific trade only, right? So let's say that you came across 10 coins that were in this kind of pattern, and of course some of them might break down, some of them might break up, okay? We're gonna play out of a 10 game example with risk to reward, with risk to reward 3 to 1. Okay, if you guys haven't seen my risk reward ratio, make sure you look at it. And we're just gonna say that you only win, you guys are a crappy trader, you win how many percent? We'll say you're a crappy trader. We'll just say, for example, you'll win 60% of the time and you'll lose. I'm so OCD about that. Lose 40%, 60% of the time. Okay. Now you're playing position size, like each win. Okay, and we're seeing that 25% gain win. Okay, and your lose could be 8%. We'll say. So it's gain potential at 8% loss potential, lose potential. All right. Now you're playing a $10,000 position. No, we'll just say $1,000 position. Okay, we're just going to say that position size. So each win, you can win $250. Each loss, you can lose $80, right? Because you have a chance to win 25% of your position, and you have a chance to lose 8% of your position size, which is $80, right? So now we take 4 wins, because we're losing 40% of the time at $250 each. That equals to $1,000 profit, right? Now we take 6 losses at 80 each. Sorry, at 80 each equals $480 loss, right? Well, the net profit is equal to profit minus your loss, right? Or more so your whatever, you can call it gross profit, whatever, is equal to 1,000 minus 480, which is now equal to $520 over time profit, right? So if you found 10 coins, right? 10 coins even with a risk to reward ratio of 3 to 1, and you found they were all doing this type of consolidation, now you got to the very bottom and you're counting the waves like me, and you're playing 10 games, and you're playing every single one risking the same amount with an assumed same potential gain of 25%. So then what ends up happening is you can gain 25% and lose 8%, right? So if you're playing 10 games and you lose 40% of the time, even where you're betting to go long, and it only goes up 4 out of 10 times, but it goes down 6 out of 10 times, right? So your each win at $250 each at 4 wins is equal to $1,000 profit. But your 6 losses, because it went down at $80 each, because that's where your stop loss was at 8%, that's $480 loss. So your net profit is $1,000 minus $480 is equal to $520 over 10 games. So this is what I'm talking about trying to win over time and not really worrying about single and individual losses. You know, I honestly scalp here and there, as you guys know, right? And I lose, like, my scalp losses are so tiny that they're not even worth posting, guys. I will cut my losses less than 1%, right? Less than 0.5% even sometimes if I feel it going right away. But, you know, let's say I cut it at 0.5 each time, right? Well, every time I'm winning maybe 1.5%, maybe 2% for my scalps, right? Just as an example. If I'm playing $3,000 or $5,000, so I'm winning like 2%, right? It could be like $100, right? So if I win, say 2%, but I'm cutting my losses at 0.5 each time, well, even if I won 2 games there, because on 2 games, I'd be winning 2%, which is 4% total, but I'm losing 2 games, which is at 0.5% total, and that's only a 2% loss. So I'm winning 4% and I'm losing 2%. But overall, over those games, I'm actually still up 2% overall, right? Because that's how winning over time works. So there's a lot of different calculations that we'll get into later as well, such as win trade expectancy formulas as well, right? You can easily calculate, you can calculate just, if you're really curious about what it is, I'm gonna go over it. So this is called the win trade expectancy formula. Okay, which is equal to your win percentage multiplied, I'm just gonna use star, is equal to, actually not everyone knows that, average win amount, right, minus your loss percentage times your average loss dollar. So now here we see your win percentage is 0.4 multiplied by your average win is 250, right? Minus your loss percentage, which is 0.6 for 60%, times, sorry, the annotation is driving me nuts, 0.6 times your average loss, which is 80, right? So what is that? It's 100, I think. 0.4 times 250, that equals to 100 minus, what is that, 0.48, $48, 0.6 times 80, $48. So your average profit per trade over 10 games, just simple sample that we're using, is equal to $52 per trade, right? That is how we see it over time, okay? As we see as well, net profit is $520. Divide that by 10 games, you get 52. So there's a lot of basic math involved as well, right? This is fairly simple. Not to say that, like, you know, everybody should be knowing it, but this goes to show from a risk to reward ratio, which you guys hear me emphasize a lot as well, on how to manage it, okay? So this is really important to understand that we cannot expect to win an individual trade over time. So we ask ourselves, is this a good setup right here? Absolutely, it is a good setup. It is a wonderful setup. Who can argue with this being a bad setup, with it being this oversold right now, right? once the wave 5 forms, is what I'm saying. So please keep this risk to reward ratio in mind, guys. They're super important concepts to understand. Whoa, what just happened there? They're super important concepts to understand. And I think that a good trader, one of his most important skills that he has, like literally the most important skill set for a trader, is to be able to manage your risk, right? That's kind of it. Managing your risk over time, because as you work with more money, right, you guys are not going to be scalping, right? Before, like, you know, maybe August, November, or August, September, October, November, a little bit of November, I was holding long term, right? Like bags of stuff, and I was scalping a little bit, but then it mainly transited to scalping because it fit my style more. But now I'm actually trying to scalp as well, while actually taking all of these trade setups as mine as well, where I'm going risk to reward ratio setups and actually talking about it. So I'm going to be holding like swing positions and maybe investing a little bit of a longer term and building an actual portfolio, right? Like an actual portfolio that I'll manage in addition to scalping as well on the side. So I think it's gonna, like, net gains is gonna be better over time. But what I'm getting to is you cannot do you cannot really trade without being able to manage your risk, right? That's, you have to be able to manage basically two things, right? You have to be able to do your homework. You have to do your homework, and you have to be a hunter, a day trader, swing trader, whatever. You have to be a hunter for setups, and you have to be able to scan through the coins and look for setups to plan your entries and exits in advance, like what we're doing right now, okay? Whether you guys call it bragging or not, I don't really care. I don't get anything out of this other than TA for myself and just to help the community. So don't think that I'm doing this for like a personal gain or something, okay, guys? I've heard a lot of negative comments, and it doesn't really bother me, to be honest, you know? Some people have told me to get a life, you know, to get a life and to go out and get a beer or something, right? Well, what if you guys had a major passion and you enjoyed doing it more than anything, and you didn't see it as a job, and it was just incredibly fun and you thoroughly enjoyed it, and you can do it for as long as you live because you had so much fun doing it every day and you look forward to it? Well, I'm sorry, guys, this beats going out and getting a beer to me, right? Different strokes for different folks. So yeah, I don't care about going out to get a beer. I like to look at charts. It's like some people can play on a PlayStation 4 or an Xbox for, you know, the rest of their life probably, or play online games. You know, it's just something that they're super, and they enjoy a lot, right? It could be anything. For me, it's charting, guys. I like to look at charts and numbers, and I like to be right. Maybe that's one of the obsessions as well, just to see. I'm very critical of myself, right? Critical to the point where I'm an overachiever. Who am I kidding? I'm an overachiever, and I like to challenge myself because I think life is very boring when you don't challenge yourself, right? So challenge yourself to see if you're right, and to try to really develop these skills, to fine tune them, and just to learn a lot of different things from different perspectives of trading. It can absolutely help you improve your skills over time. So to summarize, we've got a major resistance around here, right? I don't want to call it like just that one, because on a lower time frame we have to acknowledge all of them, but this one doesn't count. So, well, can this one count? No, that one doesn't count. Can this one count? Yeah, maybe, right? Can this one count as well as a valid support? Yeah, it's pretty much similar. So we do see it wedging into this area right here. It's at 1, 2, see? Who knows? Maybe I'm counting my entire waves wrong, and there are actually 5 in here already. Who knows? Maybe I missed it. Maybe I missed it and there's a 5 wave already, and this is the very bottom. So this is up to you guys to recognize these signs. But what I will point out is that we are at 162 Satoshi. We were at 158, 15,831. We're now upticking by a small amount. I don't know how much exactly. Probably a tiny amount, but nevertheless, it is an amount, right? It's finding support right there. Volume is starting to pick up as well. So there is a chance, guys, for a small gain. For a very small gain right here that's not really worth a lot of people's time. But as a trader, or as an investor, or sorry, as a day trader, right? It might be worth it for some people like that, based on the setup that I told you about. And now let's say that it does end up actually breaking out of there. Well, would it be unreasonable? Would it be unreasonable for you guys to set two different targets, right? Would it be unreasonable to even, let's say you set this as your first target, just your T1? Well, I'm just trying to round it off here like this. Sorry. Well, would it be unreasonable to set even a bearish scenario, right? A bearish scenario where maybe this whole thing could retrace and just form some crazy pattern like that, super extended. Would it be crazy to think that? If so, we can take two different perspectives, right? We can assume if it does bounce, maybe a 3-2 bounce only. So maybe we can even try to anticipate and extrapolate further where it could hit, I don't know, maybe this region like that, right? Where it's just going to keep wedging into there like that. Here's a more bullish scenario where maybe it, assuming that it does bounce, we can hit 0.5, right? So we can set different targets accordingly to how you guys think it's possible to bounce. But me, I'm just going to set my first target to right there. This one was at, you know, the resistance area at the 17,500 area. Maybe the second one that you can be interested in as a dead cat bounce is a little bit higher for a possible 85% gain. Who knows? Maybe it's even going to break out all the way, right? So the targets are really up to you guys to establish. But now, if we cleared all of this out, we have to acknowledge all these scenarios, right? What if this doesn't end up holding and it ends up becoming a descending triangle like this? What if we end up getting some sort of descending triangle pattern in there like that? If that doesn't hold further, what if all of these don't hold and it goes down really low and it just drops to this zone and it makes an even lower channel support, like a lower channel support like that, right? What if it falls all the way down to even these support levels right here again? So I think it's a matter of just looking at how oversold it is as well right now. It's so oversold on the 30-minute, guys. Like, it's so oversold. This tiny little bounces do, and then it's going to get oversold again, and then that's where the magic happens. But as it stands, guys, it's not really not that interesting to look at, because I still think there's that one small subwave to correct in there. But after that, around the under 15,000, specifically 14.4, that's a good region to be getting curious in it. But don't forget what I mentioned earlier, that because it had such an impulse move up, and now it is correcting more than into a bearish zone than bullish, we have to assume the worst, which is it could possibly level off here. So what are my signs? My signs of actually bullishness? Well, I want more volume to pick up first of all, and I need a candle that's going to be a solid 4-hour candle that's going to indicate the bottom. Like here, it started to indicate the series of a bottom. I might even go to a daily chart as well to look for a bottom. For example, this daily chart right here was clearly the top, right? So today is now 8 in the morning. So in, you know, 16 hours, right? When this candle forms, we'll see if it's still bullish, right? And then I'll start to go down the channel here to see if there's any candles that are starting to make it look slightly bearish or bullish. Like this one here is slightly bullish, this one's slightly bullish, but we can even see from past history that none of these candles right here indicate a lot. Like here, a doji at the bottom, yes, it reversed, but here a doji at the top, usually it reverses, right? A shooting star usually reverses. This one held true, shooting star came down, shooting star here, it started to downtrend more, right? Shooting star started to downtrend more. So some of the candles are holding true. I think it's really important to do a candlestick analysis and start to see where it levels off. And also even on the 15-minute one, right? We need to see this level off right here on the 15-minute as well. Right now it still looks like it wants to do a shape like that still. So there's not much signs of leveling off other than in the short term only. In the short term to make that fourth wave I was talking about, and then longer term as in a few hours to a day or two, like maybe a few hours, it could make that fifth wave down, and then keep your eye under 15,000 Satoshi. If it does bounce and you guys get signs of clear reversal, absolutely, we could ride it to the top of the channel resistance around 17,500 Satoshi there, right here, right? You know, 17,005, and you can even take small profit if you want there. Like, I'm no financial advisor once again, but what I would do is I would take small profit there, maybe 17.5 to 18,000. Then if it breaks out, right, I might even take half of my profit. If it breaks out, I'll add into more strength, and I'll target, you know, the first point. Logically, we're just gonna go to logically where the first point is. The first point would probably be, we have to break 18,000 first, because that new support region became support, or that new support became resistance. And then the next one to break would probably be right here, around 21,000. Then the next one would probably be 23. Okay, so if it broke right around this critical apex, 18,075, the next layer would be 21,000. The next one would be 23. Then if it does that, then it's basically a free climb all the way up to 30K. So once again, look for clear signs of reversal with the good hammer on a very high time frame if you are looking to go long on this for a long time. But you need to have that clear reversal sign first, otherwise you're just going to be digging yourself a grave. And you need to make note of the volume, right? You need to make note of the volume always. Volume tends to pick up a little bit during a slight uptrend correction. Volume starting to pick up here a lot. So this could be very well the bottom, or the fourth wave still that I was mentioning. So that's it, guys. These are my thoughts on Neblio. I hope you enjoyed it. If you guys enjoyed my videos, I'd appreciate an upvote on Steemit. And you know, they're long, these videos, okay? These are so long. But the people who are invested in these coins, guys, I know you guys are not playing with a small amount. I know most of you guys are playing with bigger amounts, right? And you know, we'll range it from 10K. I talked to some people who are playing, you know, with like millions right now as well. Like, you know, most of my friends that I talk to online are playing with anywhere between 250 to 500, and they're not small positions, right? So you ask yourself, if you're playing with even a $50,000 position or even a $10,000 position where you can gain a potential of 25%, is a 30-minute or 45-minute video worth your time for a possible $2,500 gain from a 10K position size? It's up to you guys. I really doubt that you will find anything on the internet as detailed from a technical analysis perspective as my videos on YouTube. And that is not bragging, that is a fact. Okay guys, that is why I'm trying to be different than every other channel out there, to provide top-notch analysis, to evaluate things from every different perspective. And unfortunately, my videos are going to be this long for a long time, guys. I'm not going to keep it short and to the point, because there's just too much theory to cover in every single video. So if you guys enjoy these videos, I'd appreciate an upvote on Steemit. If you absolutely love it, you are welcome to like, subscribe, and share as well on YouTube and Twitter. And if you absolutely love it and my dog, you can also send a small donation my way to buy myself a beer or something, or buy Luna beer, or buy her some weed or something like that. She likes smoking that stuff too, you know, in addition to alcohol. And so yeah, have yourselves a great day, and thank you for watching my video, guys. See you.